you buy Apple stock because you think for the next 5, 10, 20 years, they're going to continue doing, innovating and growing top line and bottom line like they have for the last 15, 20. And I think all the signs are there that they are doing that. Last quarter, they grew revenues 32% year over year. This is not some tiny little company. Revenues of $75 billion. Revenues up $19 billion year on year. That's just up in one quarter. Facebook, which everyone loves, right, trades at whatever 50 times earnings, grew their entire revenues, not grew, but was $12 billion last year. So Apple's growth in one quarter is 50% higher than Facebook an entire year. So these guys are just killing it. If they weren't doing that, the buybacks wouldn't matter. They would kind of help provide a floor for the stock. The stock wouldn't be up 30% if we didn't have that kind of growth. And so I think that obviously we're watching what's going to happen with the watch in a couple weeks. Earnings are going to come out a few days after the watch is actually launched. But that's all sort of like, I call it, playing, checkers versus chess with Apple, right? I mean, the quarter after the big iPhone quarter they had will, of course, be down, right? Guidance into the June quarter probably won't be as good as people want because the watch will be, constrained at some level.
Would you tell people to wait and buy the stock then if you're expecting a pullback at that point? Or do you think the stock already moved so much higher by then?
On the checkers, level, with Apple. I mean, I think, it's hard to say, hey, rush in, if you don't own it today, buy, new shares of Apple, but I think if you own it, you continue to own it. I think, if there's a pullback in the market, there's an opportunity. This is a long-term growth story that does everything right, at least so far, right?
Well, if there's a pullback in the market, this stock has the potential of being one of the primary source of funds within the pullback.
We're stuck at 7, I'm watching very closely because you've been on and you're unequivocal of, that it's got the potential to go to 1.5 trillion someday, I guess. Because if we're at 750 billion,
everybody? Right, that's part of the problem.
720.
The law of large numbers, I think, takes over. We'll see. But, it hasn't moved. It was at 780. It's not 780 now. It's about 730 billion. We'll see.
23.
Yeah, 723.
Yeah, no, I mean,
you're unequivocally bullish. I don't know. It's had a huge. There's a lot of things that have to go right. Those numbers you think you can do numbers like that quarter after quarter?
No, and that's my point, is that the December quarter, there will be a slowdown. So if you put it in perspective, absolutely, if you want to trade around it, on the Fast Money show, absolutely, you're probably going to have a bit of a slowdown. The company's become more and more weighted, not just to the iPhone, but actually to when the iPhone launches. And so you have these sort of quarters right around that. And so June and September will be slow, and then they'll have the 6S, which won't be as big as the 6 in terms of growth from, cycle to cycle. And then everyone will, wring their hands and say this or that about, whether they're done or whether they're but the reality is this is a great company. And you say whatever it is, $728, billion. They are at 14.6 times earnings. The market's almost 18 times earnings. So it's still a discount to the market. So the reality is if the market does pull back, I think you're going to see more of that hit the really high multiple names, the Twitters and the Facebooks of the world.
Hey YouTube fans, I'm Landon Dowdy from CNBC. Thank you so much for checking out our channel. You can subscribe by clicking right here to check out the latest Mad Money CEO interviews, market news, financial advice, and product unboxing. Enjoy!